In this video, we will talk about Jaguar Health, where things stand, where I think they will go, and whether I think you should buy its stock. Before today's video begins, if you like my content, please like, comment, and subscribe to my channel. Jaguar Health is a pharmaceutical company developing plant-based medicines for gut issues. Its stock increased by more than 10 times, from 40 cents in late December 2020 to $4.50 in early January 2021. The main causes behind this price surge were the FDA application for its medicines and the start of other tests on human and animal subjects. Of course, there's also a more fundamental reason that I will talk about later. For pharmaceutical companies, especially those that are starting up, investors are very sensitive to any news regarding approval and beginning of new tests, since they rely on research to develop new products, and the new products require authorization of regulators in order to be sold. This is why those news have the capacity to push a stock price upward. This is also combined to the fact that the current global health situation makes investors believe that there will be more demand for Jaguar products simply because many people will still have bowel problems as they recover. When we look at the financial statements of Jaguar, we can see that the company is indeed enjoying important growth from one quarter to another. Its revenue in Q3 increased by 3 times compared to where things were 12 months ago. The more important information is that the cost of goods sold has actually decreased, meaning the company is getting better at managing its variable costs by improving the product efficiency. This means that the company's gross profit is improving, which is one of the most important indicators for profitability and operational efficiency. Of course, at the current stage, the company is still incurring a net loss due to the large amounts of fixed costs that it is spending for market share acquisition, advertising, and general admin. One interesting thing about the general admin is that it includes a large amount of costs that are actually related to medical tests and experiments. In other words, they are actually related to R&D. The reason why this is a good news is because not only it is spending money to improve the company's future profitability, but also because it is an expense that will likely decrease with time. Another important aspect is its cash reserve. It decreased by 2/3 over 12 months to only $1.3 million in 2020. Given that its yearly expense is much higher than its revenue and that the financing by debt is limited, Jaguar will probably continue to sell its equity to raise capital in the foreseeable future. This means that there will be more opportunities in the near future to buy the stock, since every equity sale will mechanically dilute its shareholders, causing the share price to momentarily dip. When we look at the price action of the stock has been in a slow grind to the ground for multiple years before suddenly taking off in late December. There is no significant support and resistance levels to speak of, and I believe that there will be more demand to push the stock higher in the immediate term. The reason I believe that this is the case is because the time flows faster for investors than for FDA and the lab. What pushes the stock price higher is the current global pandemic, not because they are really waiting for the FDA approval nor the completion of its tests. The investors believe that other market participants, just like themselves, will think that there will be a seasonal flu-like virus that will require companies to periodically tweak their products and sell different versions of them every year, meaning that it'll be a recurring cash flow for pharmaceutical companies. Another way to put it is that as long as the pandemic is present in our daily life, there will be many market participants who will believe that pharmaceutical companies will stand to make large amounts of money because there will be enough demand from the society at large to buy those drugs, which will bring profit and high stock price. Just as a side note, this may be an example of a disconnect between the financial market sentiment and what really happens. Back in the earlier days of the pandemic, a lot of investors bought the stock of companies manufacturing alcohol wipes, masks, and other hygiene products, thinking that their profits will go through the roof. That has not happened. My family first bought many boxes of masks, thinking that we will go through them very quickly. As it turns out, we have used less than 10% of our initial estimates. 3M, the American conglomerate making most of the masks we were told to wear, did not see its share price going through the roof. In fact, its share price has been going lower since 2018. There are plenty of vaccines for flu every single year. It doesn't mean that people will actually take them. It largely depends on if their psyche tells them if there is an imminent danger. Basically, my point is that the market price is based on sentiments, not reality. In the case of pharmaceutical companies that used to be penny stocks not so long ago, we should see the current situation as an opportunity to ride a bullish trend, not to ride it so long that the reality wall hits in front of us. For the simple reason that it may not be what we were expecting. I believe that this wall of reality will come to be before 2022. In the meantime, fear and greed will drive certain stocks to a much higher level. Keep in mind that it doesn't mean that a company will simply collapse when the global pandemic is over, but that people's perception of what matters in life, and in terms of the financial market, which stocks to invest in, will change. That is potentially when the price will go through a major price correction, wiping the gains in the previous month and restarting to go higher from a much lower price level. Personally, I believe that this company has growth potential in the long term, but there is no need for your position to take a massive hit just because the market sentiment has shifted. Based on my analysis above, my recommendation is to buy the shares now. The market seems to be ready to continue higher, and it is now a good opportunity to ride the bull. One important aspect is the timing of the trade, more specifically, when you should sell the position. I believe that the position should be sold within 6 months, because by that time, a significant portion of the global population would have received the vaccines, at least enough people to see the daily infection number dwindle down to a non-material level. Of course, there is always the probability that the stock will keep go higher as more people start to buy its products, as the company has more products to sell, as the FDA approval goes through, and so on. So, for those who wish to keep a long-term position, my recommendation is to sell 80% of the position within 6 months and to keep the remaining 20% for the long term. Alternatively, you can also have a trailing stop for the position. A trailing stop usually sells the position if it has decreased below a relative level. For example, if you set the trailing stop to 30%, the position will be liquidated at any time if it has dipped by more than 30% from its peak. This is just an example, of course. You can set it to 50% or more so that the position can survive more significant price correction. Because this company has been a penny stock until not so long ago, I would recommend to limit your maximum exposure to 2% of your portfolio. Thank you very much for watching. If you like my content, please like, comment, and subscribe to my channel.